Stock Play of the Day is an educational program. Any statements made by Ally Invest employees are not intended to be or should be considered investment advice, a recommendation to buy, sell, or hold a security, or a recommendation to adopt an investment strategy.
Hello and welcome to the Stock Play of the Day. Today's stock is Amazon. We'll discuss should we pass or should we play? Hello, my name is Brian Overby. I am the Senior Options Analyst with Ally Invest.
And I'm Lindsey Bell, Chief Investment Strategist with Ally Invest.
All right, Lindsey, before I pass it to you, I'm showing a one-year chart in the S&P 500 index, but I just want to highlight what has happened recently. We have a lot of solid green bars here that have led to a new high in the S&P 500 index. We talked a lot about where the VIX was at in September, and the fact that we were really struggling to break below that 20% level, which seems to be a line in the sand, a very important area for the actual spot VIX index. We had some news about the debt ceiling. Seems like that was really keeping the VIX elevated. Congress did kick the can down the road. They'll be talking a little bit more about it in December, but that has freed up the marketplaces overall. We're getting to the end of October, which is usually a good sign for the marketplace. In general, September and October have a tendency to be a little bit more volatile and a little bit weaker months in the marketplace. So with that said, we have a lot of earnings coming out this week. Lindsey, what do you see happening in the S&P 500 index?
Yeah, Brian, I was just going to say that move in the S&P 500, it came at a very interesting time. While the DC debacle, of course, played a major role in that pullback, I also think increased or heightened anxiety from investors about the supply chain disruption and how that's going to impact margins, as well as higher labor costs in the market and higher raw material costs also were weighing on investors' minds. So what happened? We saw that pullback in the S&P 500. We got almost a 5% drawdown. And that the market really kind of bottomed in early October, right before earnings season started in earnest. And since then, you've seen the market move higher because, Brian, earnings have been a lot better than people had expected, despite all those major headwinds that we got all, our panties all in a tizzy, I guess, about before the reporting period. So where do we stand right now? Well, last week, about 25% of the S&P 500 reported earnings. And through this morning, 86% of those companies have beat earnings expectations. 76% have beat sales expectations. So those are big numbers. It's still early in the season. Those could come down as we typically see, but still that's a strong representation. And Brian, going into this week, we've got a lot of tech earnings coming out. In fact, 48% of the market cap of the S&P 500 is going to report this week. And that's because the tech-heavy names are in there, your favorites, the FANG names. And what we saw, Brian, you mentioned the S&P 500 and the Dow hitting another new all-time high today. Well, the NASDAQ is within a hair of a new all-time high as well. They've been a little bit slower to rebound. The tech companies that have reported, we've only seen about 10 of them. We're going to get, like I said, a lot more this week. But those that have reported have consistently beat on the bottom line. So 100% of companies that have come out and reported results have seen results come in better than expectations on earnings per share. Now, on top line growth, Brian, hasn't been as great of a picture. About 50% of the companies that have reported have beat sales expectations. And remember, I said the S&P 500, 76% are beating sales expectations. So tech is lagging there, but the bright side, the silver lining, or the unexpected, I guess, result from the few tech names that have reported is that margins are coming in better than expected. You know, a lot of people expected margin pressure in the tech names because this is, of course, one of those sectors that is really being negatively impacted or potentially expected to see margin pressure because of higher labor costs. There is high demand for tech talent. And tech talent is in a position right now to demand higher wages. And so companies are starting to grapple with that. And we're kind of expecting to see some of that come through in the earnings results. And we haven't yet seen that. And so the market is rewarding. The market's rewarding companies that is able to maintain margins or see margin growth, which the majority of them have seen gross margins expand so far. Again, only 10 companies reporting, so there's a lot more wood to chop here. But the stocks have reacted positively, up 1.7% the day they report earnings on average versus an average rise of 1% for S&P 500 companies that are beating sales and earnings expectations. So we'll see how this week pans out. We had Facebook reporting yesterday, Google or Alphabet, the parent company, and Microsoft are going to report after the close today. And then on Thursday, Apple and Amazon are going to report. So those are going to be very important to watch. Again, I always like to remind our viewers that Apple and Microsoft are the heavyweights in the tech sector. They account for about 37% of net income for the tech sector. So their earnings matter the most. Now, that doesn't mean they're going to move the sector the most, but they are very important companies to watch. I mean, they do have a heavy weight in the sector too, from a market cap perspective as well. So they're important is the final line. But, the FANG names get a little more of the attention more often. So now that's what we're seeing in the tech space. Like I said, I think earnings this season and commentary from management teams, while they are talking a lot about supply chain disruptions impacting margins are still holding pretty steady. When I look at the S&P 500, 16.2%, that's a pretty high EBIT margin or operating margin for the index. And that compares to about 14% pre-pandemic. So we're hanging in there, and you're not seeing expectations for margins fall. I think part of it is corporations are figuring it out to manage these higher costs, and they're able to push prices higher. Consumers are absorbing the higher prices. You hear everybody talking about that. We'll see how long that lasts. We're still uncertain if inflation is going to be transitory or not. Only time will tell. But so far, from what we're hearing from corporations, has been encouraging. Whether people want to admit that or not, I'm not too sure. Anyway, the earnings results, Brian, I think you talked about the VIX a bit there. It has come down. Investors seem a little bit less nervous than what they have been. Do you think we can stick at these levels, or, we've got the DC debacle that's going to rise to the surface again in early December? Do you think we get back to that 19-20 range then?
Well, we're looking at the VIX right now, and we're actually seeing the VIX going up on an up day, and that's usually not a very good sign for the markets. But that's just one data point that has recently happened. What was big when we mentioned this? The debt ceiling was making people very nervous. VIX was struggling with this 20% level, and I'm going to highlight this on the chart. And we were just hanging in that 22, 23%. Like, look at the number of bars that we had above that 20% level between 22 and 25, where that VIX was hanging out before the debt ceiling got kicked, the can got kicked down the road a little bit. Now we've broken down, hung around the 18% level, and finally we're seeing some strength in the marketplace, obviously helped by earnings, as you were mentioning. We're down around that 15% level. That is one of the lowest that it's been in a real long time, especially to hang there at a sustained rate. Now, overall, to see the VIX up a little bit on an up day in the S&P 500 index, usually on a good day, that means a little bit of a lot of people not believing the move as much today. But we are setting a new high. We fractionally, I think we touched a new high intraday in the NASDAQ index. But if I go out to December, we still see the VIX right around that 20% level. Once again, we're talking about that debt ceiling, and I'm going to scroll up a little bit on my VIX watch list. And if we go out to January, we see the 22% level. So it's showing, the VIX is showing up at higher levels as we get out to that debt ceiling discussion. So they haven't forgot about it. The VIX futures have not, at least. But if we look at the November future, we're down below that 20% level. And right now, obviously trading right around 16%, which is fairly low implied volatility in the recent years, I should say over the last year and a half, that is pushing the lows of the VIX index and the actual spot index. All right, so Microsoft tonight, Alphabet tonight, you already mentioned them. And then we have Apple announcing on the 28th. We also have Amazon announcing. So we're going to talk a little bit about Amazon and their earnings. So before I do that though, Lindsey, let me run it and look a little bit at that Amazon chart. Okay. If I look at Amazon, these are actual channels that I've drawn a while ago, and I actually just pulled up the Amazon chart and they were still in there. But we've really struggled in Amazon as far as, well, I should say it's performed very well over the last year, but going all the way back to the beginning of July in 2020, we've really been trading within a channel. Had a small breakout, but it couldn't handle it. Now I actually drew a little trend line. So a very interesting area for Amazon. You'll talk a little bit about the positiveness that we're having today, but struggling to break out through this trend line, still above all the moving averages. We have the 200-day hanging out here. We have the 50-day. We have the 20-day moving average. But I think it's fairly important that if we close going into earnings at the end of this week and we can stay above this trend line, overall, that's a good sign. Right here is the top of that channel, the very, very important area around 35.56. And then obviously you're looking at the new high that would come into play if we could get that type of movement overall. Obviously a very interesting area going into earnings. So what do we see about the fundamentals of Amazon before we hit the earnings date on Thursday after the close?
Yeah, Brian. So before I get into the fundamentals of Amazon, I want to make two housekeeping announcements. First and foremost, Brian and I love to take your questions at the end of the show. We always save a couple minutes to hear just from you. So type them in the chat box on the right-hand side of the screen. We'll get to as many as we can at the end. If you want to just give me a shout out, say hello in the box too. We love to see and know that you're there and you're paying attention and we're not putting you to sleep. So feel free to do that. And then second of all, Brian and I will be hosting our next Ally Digital Conference on November 3rd. And it's going to be all about the new look of wealth. We're going to have people talking about the new definition of wealth, people talking about social media's influence and the pandemic's influence. Brian's going to be on a panel talking about whether a financial advisor is worth it or not. So there's a lot that we're going to cover, and there's something in there for everybody. And if you can make it to one or two of the sessions on the day, I guarantee you that it's going to be beneficial to you. So to learn more about that, you got to go to ally.com/digital conference, register for the November 3rd conference, and we hope to see your smiling faces there. Now, with that said, I'll probably remind you of that again at the end of the show, but let's talk about Amazon. We're looking at the chart with Brian. Let's talk about the fundamentals. Like Brian said, if you look on the left-hand side of this chart that he shared, you see a big move up and to the right. And that move is earlier in 2020 when the pandemic hit. And obviously, Amazon was the place to go. That it was a major stay-at-home, work-from-home type of play. You're ordering your groceries and all of your needs there. You weren't really going out into the public because of all the restrictions and mandates that were in place. So Amazon stock benefited, so did their earnings, and they had great profitability, amazing sales growth over the course of 2020. So we got into 2021, things got a little bit more rough. You see the chart here in the middle chopping around, and it continues to do so. Like Brian pointed out on the right-hand side of the chart now, you're seeing some interesting movement in the stock. It hasn't been one of the big high flyers in the FANG names. And in fact, if you go from September 1st to today, we're heading into earnings. This is a stock that has declined 4.5%. That's when the S&P 500 has gone up 1%. Again, I'm talking about since the beginning of September. So September was a pretty rough month for the market overall, and especially tech, as you know, the yield situation and inflation concerns were weighing on investors' minds. So this is a stock that really has struggled. It's also a company that in their second quarter earnings report talked about a deceleration in their online and e-commerce business. And that was related to people being more interested in going out and the reopening trade and things like that. Well, now with the rise of the Delta variant in the last quarter, we're seeing the exact opposite. So this should be a good quarter for e-commerce sales and growth. And also you hear and see all over the news media the concern that the inventory isn't going to be there, or supply chain bottlenecks are going to ruin Christmas this year. So a lot of people are shopping earlier. And who do you think is the major beneficiary of that? That's going to be Amazon, of course. people going to their online go-to shopping stores, which primarily is Amazon. I know I shop there all the time too. I think Brian does as well. Anyway, so the e-commerce business should do well. The question, though, this is a prime candidate to talk about those supply chain disruptions, is the fulfillment options, the fulfillment ability of Amazon as we head into that really busy holiday selling season. So I'm sure the company is going to talk about that. People are concerned about the costs related to that. But you have to remember, offsetting the cost concern is the fact that Amazon, they have one of the largest distribution networks out there that they own and operate themselves. So they have that benefit. And then also never forget that it's a huge player in the cloud business too. And there are some analysts out there talking about how operating margins in the cloud business should move higher and could potentially offset maybe some weakness that you see in the e-commerce business. So I think there's a lot of moving parts when it comes to Amazon this reporting season in particular. Today, you see the stock jumping, like Brian mentioned, on news that its Cooper satellite unit is striking a deal with Amazon, or with Verizon. They're going to offer broadband services to underserved, smaller communities out there that have, are less likely to be served by the Verizons and big communication networks out there. So that's positive news for both companies, really. And you see Amazon's stock reacting positively to that. You know me, I'm always going to take a look, Brian, at valuation of any stock that I'm talking about. So Amazon, it is trading at about 67 times on a forward price to earnings basis, which is a really high multiple. If you think about the S&P 500 trading at nowadays about 21 times, but the 67 times multiple is lower than the 5-year average of 100 times. So that's a 30% discount. You know me, I love buying things on discount. Talking about shopping for Christmas, I'm going to try to get things on sale as much as I can. So that price for Amazon stock seems to be, it feels like a sales price. And I think a lot of it has had to do with the e-commerce slowdown. People concerned about what the reopening story, and when people return to work and return to buying things at brick and mortar, what that's going to mean for Amazon. And so I think this stock has really struggled under that situation. Also, don't forget, because 2020 was such a blockbuster year for this company, it's been a little bit harder for these guys to post big numbers on top of huge numbers last year. So it's a kind of a resetting, I think, for many investors, resetting for the company. They're still spending on expanding their fulfillment opportunities. So you're going to see earnings per share this quarter about $3 lower than what it was last year in this quarter. So this is a company, as we all know, Brian, is not afraid to make investments in itself, but it's also making investments in its people, raising wages, things like that. So again, a lot of moving parts for this company. I think you had mentioned that the implied move in the stock on earnings is about 3 or 4%. You can correct me if I'm wrong there. But yeah, so it's going to be an interesting one to watch on Thursday. So that's the fundamental story. If you got some pros, you got some cons. Again, a lot of different things that could impact the stock, but it's going to be one to watch. And Brian, you've been looking at a options trade on this guy. So what are you thinking?
All right. Well, thank you for that great analysis going into their earnings. And the chart is interesting, especially if we can show some strength going into earnings on Thursday. Now, nothing that we talk about here on the stock play of the day is meant to be a recommendation, and especially when we're speculating around earnings. So today, just like last week, we talked about Tesla. We looked at a butterfly in Tesla, a fairly speculative trade, a fairly advanced trade, actually, for the stock play of the day. And we're going to stay there this week with a butterfly in Amazon. So what we're looking to do is to speculate on the upside. Tesla actually had a very strong earnings. They had a solid earnings report that led to the stock higher. And then they had some more news this week that after breaking through a new high, now they're setting another new high today overall. A little bit of a pullback in general, but a very strong week so far. Here we are on Tuesday. The stock is pushed up, is now $1 trillion company. So that's worth mentioning. All right. So Here we are in Amazon, another $1 trillion company, and we're looking at a long call butterfly spread. We're going to be just speculating on what may happen after earnings. We're going to go way out of the money. We're going to use small capital. And that's one of the things about a speculation trade, and what options can do for you is they can allow you to use a little bit of capital to still participate around an earnings report. Now, I normally would not do, a lot of people get excited about earnings and they like to sell spreads. They like to sell a call spread if they think it's going to be bearish, sell a put spread if they think it's going to be bullish. But in those instances, you're usually bringing in a small credit and you have additional risk. Here, we're going to pay a small debit, and that's going to be our total risk. And we're going to pay a lot of attention to where the implied volatilities are at and the expected move. Now, one thing about Amazon, and I'll talk a little bit more as we get closer to the event, we're a little ways away. Now, normally, if I'm just going to do a speculative trade, I would do it on the day of, because I'm really just trading earnings overall. Now, you could place the trade today and obviously let that paper trade play out for the entire week, and there's nothing wrong with doing that. But a lot of times I like to look at a little bit closer to the date. I'll probably foreshadow this a little bit on my podcast, which we usually will tape on Wednesday after the close. It gets posted out on Thursday. We'll probably look at a little bit more advanced speculative trade ahead of the earnings that will take advantage of the fact that that Amazon's going to announce on a Thursday and the Friday options expire the next day. Think about that. That's a very expensive underlying with a lot of implied volatility, and those options have to go away in one day. So today we're going to just go out a little bit further in time. We're going to look at a long call butterfly spread. So let me scroll up to the top of the chain. I'm going to highlight that we do have earnings. It's after the close on the 28th. We are up a little bit today. We're up a little bit more. It'd be really good overall for Amazon if we could stay above that trend line. As far as the chart is concerned, that's not always a guarantee, but really struggled with this trend line and breaking out to the upside so far. I'm going to go out to the November 5th expiration. Now, if you want to be more speculative and you're a little bit more confident in your forecast, you would just use the Friday expiration, this Friday coming up, and you would set up a one-day butterfly. We're going to go out further in time. If I look at the expected move, as Lindsey's already mentioned, we're looking at about $130 move. Now, that's no regard to direction, but if you looked at buying the long straddle, and I want to highlight this, this is where the marketplace thinks about an expected move. If you look at buying the long straddle, it means we're going to buy the most at the money call, the most at the money put, and see what people are willing to pay for that. That kind of is the line in the sand. That's what the marketplace is thinking. Well, if they're willing to pay for that amount, well, that means that the marketplace thinks the people that are willing to buy that think that the market could move more than that in at least one direction, and people that are selling it think it could go less. So you could kind of think of it as the over-under going into earnings that with these option contracts that expire the Friday after they announce. Okay, long call butterfly. So we're going to go to that November. We're going to take into account that 131, or basically, it's not an exact science. You could call it 130. And we're going to go up about 130 points from where the current marketplace is at. So we're looking at the 35.50 strike. We're going to buy that option contract, and then we're going to move 20 points further. So we're going to give a 40-point area that that Amazon could land in. Now, if that's going to add a little bit to the cost by going that wide. If you want a little bit lower cost, you could do 15 points or you could do 10 points. The width of the spread really affects the area that you're hoping the underlying stock would land in. So 55. So if we go 20 points up, we're going to go to the 35.75, and we're going to sell two of those. And then we're going to go out another 20 points, and we can keep it equidistant here. And then that would be a standard butterfly, and we're going to buy this one. All right. So for when you're entering this trade, you enter it as one trade, and it is a 1 by 2 by 1. So for each 1 by 2 by 1 trade that we're putting in, we're paying $1.20. Well, let's call it $1.30. All right. The midpoint, the market's really moving right now. So the midpoint is $1.30. Now let's look at that relative. If you were just going to buy an out of the money option contract and you decided to just buy the 35.50 calls going into earnings, you're paying $2,100 for that. We're saying, okay, we have unlimited upside. And if we know that Amazon's going to blow the doors out, yeah, that's where we want to be. But if you're just speculating and you want to be able to participate, almost a fear of missing out, if Amazon does have a good earnings report or doesn't make a good move, doesn't necessarily mean that earnings have to be good for Amazon to move overall. We never know exactly what's going to happen. We can participate in this for $1.28, $128 plus commission for this one outlook. And we just need Amazon to land somewhere in between 35.50 and 35.95 by that expiration date. Now, this is part of the reason why I went out a little bit further in time. We went out to the November 5th expiration. On butterflies, they will max out closer to the expiration date if you are correct on your forecast. Now, there's a lot of ifs in there, but overall, this is a speculative trade, but this is one way that you can be in an expensive underlying stock that has a lot of implied volatility because of the earnings announcement and still participate in the marketplace. All right, so we're going to make this the official paper trade. I'm going to put this in the right rail, and I'll come back, and it'll be kind of interesting because this Friday we'll do a stock play of the day overtime. We'll mention that a little bit more as we go on, and we'll be able to see because the market will be rocking and rolling because they will have announced earnings on Thursday. So it should be a fun stock play of the day overtime this Friday at noon Eastern time. Okay, so that's the official paper trade. Buying open one of the November 5th expiration, 35.50 strike call. Selling two of that same expiration, 35.75 strike call. This way, that's 75. Okay, this should be 70. 50. All right. I'm going to adjust this just a little bit. Okay. Let's go back to the change. I'm off by 5 points. And I apologize because I had to adjust it during the show. Let's see where it's at. It shouldn't be that much more expensive. Matter of fact, it might be cheaper. 35.
So explain to everybody why you're making the change because it's talking.
Okay, thank you. Because I missed because my math isn't that great while I'm on the fly here. I might agree as in math, but sometimes when I'm speaking publicly, you can't tell it. All right, so 35.50, 35.70, that's 20 points and 20 points because we want to be 20 points wide. So 1 by 2 by 1. And in this instance, yeah, we're actually a little bit cheaper. We're 68 cents total now. I added 5 points on the long side, so that made it a little bit more expensive. So we can actually have a 40-point wide sloth or area that Amazon may be able to land in by next week that would be profitable on this trade. And the total cost of that trade is going to be 50 cents right now. Let's call it 50. I'm totally fine with that. Okay, we'll call it 50, which is $50 to participate in this trade, and you just need it to land within a 40-point range, which means it does need to move its expected move, which is 130 points or so. So it is obviously a highly speculative trade. The underlying doesn't usually move more than the expected move. It's only about 60% of the time that it will. So that's what we're looking at here by setting up that trade. I apologize that I was 5 points off on my math. Okay, so let me scroll down. I had to redo the trade while I was here. And I'm just going to look real quickly at the profit and loss graph. Please put your questions. We'll answer a few of them, but I'm wasting a little bit of our time here. All right, so here's what we have. Right now, if we put this trade on, here's where the underlying market is at. We're looking at about 130 to 150 point move is what you're looking for on the upside on Amazon. That's what right around what the expected move is at. You want to land somewhere between these two little pivots right here at expiration. Right now, it's a very flat line. After earnings, implied volatilities come in. Watch if I put this all the way down to 0 days to expiration. You're going to see all of a sudden that line starts morphing in to the dotted line, which happens at expiration overall. So a fairly inexpensive speculative trade around Amazon's earnings. All right, and I'll leave it right there. And let's get to your questions. Do we have any in the chat box?
Oh, yeah. We got a handful of questions in the chat box, Brian. We're at 12:30, but let's try to take some of these. There's a couple questions about your Tesla trade. But before we get to that, I know IDK Bud was asking about the forward ticker, and you and our colleague Callie Cox covered that 2 weeks ago. So check out past episodes of Stock Play of the Day. And Brian talked about a trade in that ticker. Now, you get this question once in a while. What differs when you use puts instead of calls for this strategy?
Okay. So if I am going out of the money and I'm speculating with a butterfly, because if you look at the long butterfly spread inside the options playbook, it talks about it as a neutral trade. Basically, strike B, the one that you're selling, is located where that underlying stock is at. On expensive underlyings, I would prefer to pick a direction and hope that I am correct on my forecast. If I'm going to use calls, I'm going to go out of the money on the call side. If I'm going to use puts, I would be bearish and I would go out of the money on the put side. I want to deal with the cheaper price options overall when I'm using the calls or the puts, and the out of the money on option contracts usually are. But ideally, I look at a long butterfly spread with puts. If you're buying the same strike, they're the exact same trade. They really are. The only dealings are if you're going to use puts on the bull side, well, they're going to be very expensive puts because they're going to be way deep in the money. And then that adds to the width of the bid-ask spread. So because we decided to be bullish in this, we flipped a coin, said we'd be bullish going into their earnings. We used calls and went out of the money, even though they're still really expensive overall.
Do you want to address the Tesla trade, Brian? Because about 3 people have asked about if there's still time to get into Tesla. Did we miss the train? They're asking to review the trade you did last week. I don't know how you might want to address it.
We're a little bit long in the tooth here to be able to go back and review the trade, but we did a speculative trade, much the same as we did here. The forecast was correct. The underlying market went up overall. There was a possibility to be able to get out of that trade at a profit, and you paid, once again, a very little amount. You actually had, I think it was like a $50 trade overall, and the potential that you could make was 20 points wide. So $2,000 overall. And the market just turned out to be right. And unfortunately, because of travel and everything else that was going on, we were not able to have a stock play of the day overtime, or else that would have been kind of a fun show to talk about. But Tesla's always a tough one. Like, did we miss the trade? They had some really good news. Some analysts came in and upgraded them. Some people targeted 1,200 were some of the numbers that they were tossing out. But fundamentally, you go back and forth. Is it a car company or is it a tech company? And it's obviously very overpriced if it is a car company. On a tech basis, it's hard to tell overall if you think that it's just going to be a forward-looking company. So I can't really speculate on if I think the market is going to continue on up. We just kind of use options to be able to. I look at these trades as FOMO trades. I think it might go up. I don't want to spend a lot of money on it. I'm going to use it on a relative basis. I'm going to try to find a way that I could participate if their earnings and forecasts are good. And these long butterflies on the expensive underlyings are one way to do it.
All right, Brian, we are way over, but there were such good questions. We had to take a few more of them. Sorry, we didn't get to all the questions. But maybe we can revisit another trade in Tesla in the coming weeks, because the good thing about Tesla is it is a volatile stock. So there's always some way to think about putting an options trade on that one for sure. So that we're going to have to close out this show. Brian will be back, though, on Friday at noon to review today's trade in Amazon. Again, it'll be really interesting because Amazon will have just reported earnings. And so I'm sure Brian's going to have some interesting thoughts and takes on where the stock and this trade moved since today. So be sure to tune in for that right here on the Ally YouTube channel. And again, in the chat box, we've got the link to the Ally Digital Conference, which is going to be held on November 3rd. Please register and consider attending. Pass that link on to all of your friends. Invite anyone you know that wants to get smarter about their money and smarter about investing. Right, Brian?
Oh, I agree. I agree. Definitely share with as many as you can. And with that said, please click subscribe and ring the bell, and we'll let you know about the next stock play of the day. Thanks for coming, everyone.